Most people focus on stocks, but behind the scenes, currencies are what usually move first. And right now, the US dollar is sitting at a really important level. So in this video, I'll walk through a simple currency roadmap and what it could mean for markets over the next few months. So think of currencies as the foundation of the financial system. When money moves between countries, everything else reacts. Stocks, commodities, even interest rates. So instead of trying to predict markets, we just watch where price is, what level it's reacting to, and what happens next. So my first chart here, I've got the US dollar or the Dixie. This is the main one. The US dollar is like the center of the system. Right now it's sitting at a key level. So from here, there are only really two paths. If the dollar goes higher, it usually puts pressure on stocks. Commodities like gold and oil can struggle. Markets tend to get more defensive. If the dollar drops, it tends to support stocks. Commodities can move higher. Markets become more risk on. So this chart is basically which way is everything else likely to go. So the next chart we have is the Euro USD. So the euro is a big part of the dollar index. So this acts like a confirmation signal. Right now, it's trying to move higher after being in a downtrend. If the euro keeps rising, that supports the idea of a weaker dollar. If it fails and drops, that supports a stronger dollar. So this chart is going to help answer, is the dollar move real or not? The next chart we have is the Australian USD. This one's interesting. The Aussie dollar is tied to commodities and global growth. So think of it like a risk indicator. Right now, it's still in a downtrend, but trying to push higher. If it breaks higher, that's usually a good sign for commodities and global markets. If it drops again, this can signal pressure on markets. Then we'll move on to the yen USD. This one's a bit different. The yen, excuse me, is more of a stress signal. When the yen strengthens, markets become more volatile. When the yen weakens, things tend to stay more stable. Right now, it's sitting near a key level after a long decline. So this one is worth watching for, is volatility about to increase? Now we'll move on to the British pound USD. This one's simpler. It's just another way to check the dollar. Right now, it's forming a base, sitting in a range. If it breaks higher, that supports a weaker dollar. If it drops, that supports a stronger dollar. So it's nothing particularly fancy going on here. It's just confirmation. Now we'll move on to the Swiss franc USD. So think of this as a safe haven currency, similar to gold. Right now it's already moving higher after breaking resistance. If it keeps going, this supports the idea of a weaker dollar. If it pulls back, that could signal short-term dollar strength. So putting it all together, so instead of looking at one chart, we look at them all together. If currencies are rising, it usually means the dollar is weakening and the markets are supported. If most currencies are falling, that usually means the dollar is strengthening. The markets can come under pressure. So this isn't about predicting anything. It's just about watching key levels, letting the markets decide, and reacting to what actually happens. I've put all these charts together in a full currency roadmap that is updated monthly. So if you want to follow along and see how this plays out, I've linked it below, and I'll just keep updating as things develop. If you found this helpful, give this video a like, and I'll keep breaking this stuff down in simple terms.